Till now we have discussed about what is statement of affairs method. We have done one problem about statement of affairs method. We have to do more problems to get the confirmation of statement of affairs method. And illustration 2 on statement of affairs is illustration 2 on statement of affairs. Find out the profit of Mr. Advait from the information. Capital at the beginning of the year rupees 20 lakh. It is capital at the beginning of the year is nothing the opening capital. Drawings made by Mr. A is rupees 2 lakh. Capital end of the year is rupees 25 lakh. Additional capital introduced rupees 1 lakh during the year. Additional capital introduced means sometimes he don't have sufficient capital in the business. On that time he had introduced more capital to get the running expense of the business. We have to prepare statement of affairs method, statement of affairs account from the following information. Opening capital is 20 lakh, capital introduced 1 lakh, drawings 2 lakh, profits don't know, closing capital 25 lakh. We have a one rule in statement of affairs method. Closing capital minus opening capital is equal to profit. In this video we have all the things except profit. That's why closing capital is equal to opening capital plus drawings minus additional capital plus profit. We have all the things. Opening capital is there, additional capital is there, drawings is there. We have to minus from closing capital. 25 lakh is closing capital, 20,000 is opening capital, 1 lakh is additional capital, minus 2 lakh is drawings, plus 6 is profit. We have to minus from 25 lakh. We get a profit of 6 lakh. The profit for the year 2008-9 is rupees 6 lakhs. This is one of the problem in statement of affairs method. Illustration 3. Illustration 3 on provisioning. In a concern, opening provision for doubtful debts is rupees 51,000. During the year, a sum of these 10,000 were written off as a bad debt. The closing balance of funded debtors amount rupees 6,30,000, and it was decided that 10% of the debtor is to be maintained as provision. Calculate the closing balance toward provision for doubtful debts and pass general entry for giving effect of the provision mentioned. Provision for doubtful debts is 51,000, bad debts is 10,000, standard debtor is 6,30,000, 10% of provision is 63,000. Bad debt is the expenses. It shows always debit balance. Bad debt is rupees 10,000 is the opening balance. Opening balance is 51,000, and balance carried on is 6 lakh, and balance carried on is equal to 10%, and standard debt is 63,000. We get a profit of 22,000. General entries in the books of ABC Limited is bad debts account debtor to standard debtors account rupees 10,000. Provision for doubtful debts and bad debts is account debtor to bad debts account rupees 10,000. Profit and loss account debtor to provision for bad debt is equal to 22,000. Cost and profit and sales relationship in introduction. Cost, profit and sales relationship. Let us consider the following. Cost is equal to 100, profit is 20, sale is equal to 120. Now profit with respect to the cost is equal to profit is 20 and cost is 100 is equal to 1 by 5 and cost. Profit is equal to 1 by 5 and cost. Profit with respect to sales is profit by sales is equal to 1 by 2 by 120 1 by 6 on sales, that is 1 by 5 cost and 1 by 5 1 by 5 is 1 by 5 cost is equal to 1 by 6 on sales. Example for relation between cost and profit. Cost, profit and sales. Cost is equal 90, profit is equal 30, sales is equal 120. Now profit by cost is equal to 30 by 90 is equal to 1 by 3 on cost. Profit by sales is equal to 30 by 120 is equal to 1 by 4 on sales. That is 1 by 3 on cost is equal to 1 by 4 on sales. The relationship is for sales it will be always one digit more than denominator. That is 1 by 3. 1 by 3 is more one digit is more than is 1 by 4 sales. That is 1 by 3 is cost and 1 by 4 is sales. Illustration 4. Cost, profit and sales relationship. A trade purchases goods for 1,70,000. The opening stock for inventory prior to said purchase was 30,000. His sale was 2,10,000. Find out the closing stock of inventory. The gross profit margin is 25% on cost. 1 by 4 on cost is equal to 1 by 5 on sales is equal to 1 by 5 cost into 2,10,000. That is 1 by 5. 1 by 4 on cost is equal to 42,000. Trading account. Opening stock is 30,000. Purchase 1,70,000. Sales 2,10,000. Closing stock 32,000. Profit is equal to 42,000. Closing stock of Mr. A is 32,000. Debtors and creditors velocity. Debtors velocity, also called as debtor turnover or collection period. In the day-to-day business organization, the business organization sell the goods to debtors without sell the goods to customers on non-cash payment. The cash payment made by the customer is some fixed period. The fixed period is called velocity. In the fixed period is maybe 1 month or 2 months, whatever. We have to know the clear declaration about debtor velocity. Annual credit side is equal to 24 lakh. Closing debtors is 4 lakh. And debtor velocity we have to find it. 24 lakh we have to pay in 12 months. And 4 lakhs we have to how many months we have to pay. That is we have to do cross multiplication on these figures. 4 into 12 by 24 is equal to 2 months. Debtor velocity is 20 months. In the 2 months he have to pay 4 lakhs in 2 months. Creditors velocity is equal to 1 month. Closing creditors is equal to 50 lakh. Actual ACP is equal to how much? In this also we have to do cross multiplication. 1 month is equal to 50,000 and 12 months is equal to, you have to pay 1 month 50,000. How much money we have to pay in 12 months is equal to 12. We have to do cross multiplication. 50,000 into 12 by 1 is equal to 6 lakh we have to pay, and for the year, that is ACP is equal to 6 lakh. Illustration 5. Debtor velocity.